Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson I'm going to show you how to go through our methodical, objective trading approach to anything that moves, and it's going to eliminate the vast majority of your poor odds losing trades. This is our technical approach to trading anything that moves, applies to any time frame, applies to the opposite on the short setups. And I'm going to go through a setup that we have on a breakout, and I'm going to go through these one by one in a very methodical, slow method. But once you get the seasoning, it's like instantaneous. This is the chart we're going to talk about, Textron Inc, the daily chart. All of our daily charts have color-coded candlesticks and volume. The blue is the 20, green 50, red 200. Very simple, no confusing, misleading oscillators. We read objective price action. First one, price is king, everything else is secondary. No setup, no action. You need a starting point on the time frame that you're trading is what is the compelling pattern that you want to trade. And then we're going to overlay those other concepts to determine if it's a high probability setup or not. So what is my setup in Textron Inc right here? Well, let's analyze it. So we had a breakdown failure. We had a greater than 100% retracement, which is bullish price action. And now we're here on the flat 20 and 50 moving average. And this is what we call a bull 180 breakout. A big red bar fully reversed by a big green bar, and it broke out. This was also a very valid trade, which is the subject of today's lesson. But we're focusing on this one now. This is now retracing, building support over time. It's less than 40% retracement, little downside shakeout, red bars ignored. This is what we call bullish price action, and I call what I call a minor 1, 2, 3 continuation. This is a 1, 2, 3 continuation, a big fat green bar, one or more inside bars, and you buy over the highs. And this was the 180 that I also showed you right here. So this is a breakout setup, and like I said, this is a little 1, 2, 3. It would be a beautiful 1, 2, 3 if this bar were just wider. Now, next on the checklist, trend analysis. Well, we define trends very simply by the arrangement of pivot highs and pivot lows. That's what these red and blue dots spit out. A pivot low is 3 or more higher lows on the left and right, opposite for the shorts. So this was a downtrend. Now that I took out a prior pivot high, we broke the back of the downtrend and we move it to sideways trend. Once we break out over these multiple pivots, we're in an uptrend now. So I'm in an uptrend with bullish price action. Check. Let's keep going. Multiple time frame analysis. Do multiple time frames support the trade? Whatever time frame you're trading, go up one time frame. So this is the identical point in time as the daily chart, and it's my weekly chart. That's one time frame higher. So here's a breakdown failure, wide range engulfing, back to the high of the consolidation, closing breakout, 2 inside bars. We have the concept of price void, both on the daily and the weekly. You look to the left, there's insignificant resistance. You saw on the daily there was no resistance to the left. So here on the weekly, obviously it has more data, but this is bullish price action, and the chart suggests it's going to go through this. So the weekly chart 100 supports bullish price action on the daily time frame that we are trading. Support and resistance analysis. So this is pulling back. This could have pulled back and gave us a buy setup on minor support. Prior highs are minor support. Prior lows are what we call major support. But this is creating support over time, which is bullish price action. It retraced a little bit, but it's pretty much going sideways. Relative strength weakness analysis now. Here's our Textron daily chart that we've been looking at, comparing it to the sector, which is the defense military sector here. In an uptrend, so that's a check mark. That's strong. Here, the S&P 500, comparing it to that. These two, both our stock and our sector, are showing relative strength to the S&P 500 ETF, which broke out, failed, made a lower low. So this is a big sideways trend. Also notice our Textron's the only one that has a rising 200 period moving average. Check mark there. Volume analysis, we call it a secondary. We trade the candlesticks and patterns. We don't need it, but let's see if it gives us any useful information. We're not trading this one. I'm just pointing it out that this got climactic to the downside on big volume. So there was a lot of longs that got shaken off. There were some short traders in there. And now here was our very bullish greater than 100% move. That's a very bullish move. There's our 180 that we've been talking about. Look at the volume on this wide range green bar. That's what we call committed volume. So that makes this 180 reversal even more potent, if you will. Now, here's our bullish consolidation, the pattern that we're trading now. Pick up in volume while it's an inside bar. It made a higher low bar, inside bar, and that's bullish volume. What are the broader markets doing in our market internals? This is a page that we use showing our market internals, the S&P 500 ETF up here. We just showed you on the prior page. And our market internals, we use sentiment and breadth. That's it. We want them to be in alignment. These show when the bulls or bears are getting too bullish or too bearish, and they give us these warning signs when they're in alignment. So this was too much fear. And there you go, we had a wide range breakout. These two spots are showing too much bullishness, so that gives us a heads up of be careful on the risk on the longs are increasing. Right now, they're neutral. Breadth is in an oversold territory, but it could go lower, and our sentiment has burned off a little bit from the bearish level. Position and money management. Without, my partner Greg Capper has an amazing advanced management strategy course. Check it out. Here's just a simple example for you. We're actually giving this as a directional option trade where we're buying in the money call options. We get the benefit of limited risk and levered returns because they're liquid. But for calculating position size on stocks, you just calculate where your entry is, where your stop is. And we're going to give the stop the 20 period moving average in this case, just to give it a little more wiggle room. If this bar were larger, as I said, if it was a genuine 1, 2, 3 continuation, the stop would be under the low of that. This is the format we give all our trades to subscribers. We give the date, the symbol, the technical strategy, and what we're doing, the setup and trade management along the way. Hope that helped. We have a fantastic special going on right now in connection with our stock and option investing education series. Go to mastertrader.com/investing special. As always, any questions, email my partner Greg Capper or me. Good trading. Look forward to seeing you in the next trade review video.